Hello, welcome also to my English students. I hope you're doing well. And today's lesson, we are going through the simple scalper strategy. And trading you, that means you have own analysis. So excuse my sometimes I have a little bit to cough because I'm sick, but we are doing it anyway. So I'm sharing my screen. So, okay, first we're gonna through what you need, and what you need is you have to go on the member spot on the onboarding school, and then you have down below onboarding English. You go to step 2, and then we have step 3, sorry. Step 3, and then we have the simple scalper setup. So here I just linked then the new video, and you can open the document. Plus what you can do is you can activate this strategy by yourself. You can trade it in HiveX and Liberty, or you can trade it in TradingView. So that's all by you. Here you have the strategies, and I love to trade simple scalper 1.0 because that's equal to what we're doing. We have here another scanner 2.0. You see, okay, it's a little bit different here. The look is a little bit different. I haven't found really much about this, so I'm always activating just a normal standard strategy. What here is not so comfortable, you can make a new chart layout for analysis, but I think I'm not comfortable with it, because all 5 minutes oh no, here not 5 minutes, you have new signals there coming. For example, here it will be was a good one. Yeah, but here's the problem. It's when a new signal is coming, it's just yeah, your analysis is gone, and that's not so cool, I think. So you have this opportunity for free if you don't wanna buy the cheapest TradingView stuff. So you need this lesson, then you can log in Liberty or a new TradingView account, and you need the handout. What we here have for other explanation is the 𝒕 basic strategy. So here she explains step for step everything. Also, so this is a good video to watch. What you also need is forex-factory.com for the news. So we just always how should I say, you always actualize it. So you have a refresh, yeah, so you have a fresh start. Here the economic calendar. While we're checking Q news, it's like here you have these ordinary sheets. When they are red, we don't trade for 4 hours. So you see here it's in the afternoon, so maybe it's, I don't know, 4 p.m. it's a red ordinary sheet, so you know, okay, you shouldn't trade it 4 hours after 4 p.m. until 8 p.m. and a little bit before the news are starting, because the market always react most of the time react before the news started. So here I have your ordinary sheets with the colors, and here are stars. And really important, you have to change your time. So when you don't do it, it's not right. And I am living in Switzerland, so I take in Berlin, and then we have a look. So actually see US dollar news at the afternoon at oh my gosh, half 2 p.m. half. I don't know, try to say it correctly. I'm really sorry, but you know what I mean. Yeah, actually beside of this, we haven't much news, a little bit euro and stuff like that, but it's pretty okay. So this we have checked, and then you have currency strength meter, where you can check also. Here it is. We have another lesson with this explanation, where I explained it. Like it's we take GBP, JPY. So GBP have more bars. That means GBP is stronger, and when the first currency is stronger, like here, GBP, JPY, it's buy. Maybe we have another example. US dollar cut. US dollar has 3 bars, cut has 4 bars. That means when the first currency has less bar, then it's sell. Really easy. You have to a little bit you are going to use to it, but then it's pretty easy stuff. Yeah, that you need, and you need your demo account. I'm actually on Pocket Option. When you start, it's always Pocket Option, or you can make a live account on 𝑦𝒐𝒊𝒄𝒉. That's this page. I just show you the link. The link we have all in a document collected for you, so that's no problem. That's the live account. The thing is, to start, you have to fund at least $250. So yeah, the most of the people start with this demo account is for free. You can also pay in when you're a little bit less on money. What's no problem, what's understandable is you can start here with $50. That's the least amount. So yeah, on 𝒍𝒆𝒄 you have also then a demo account, but most of the time we start with Pocket Option. So we have our setup. What I doing today is I make a new chart layout just first to start. Oh no, okay, I don't do it like that. I just okay. For you also, it's important. You have to start. One thing is you have to load chart layout, and then you can just choose if you have one or not. You can just new chart layout. I just delete all this stuff here so we can start fresh together. So by you, the candles are green and red. So I go to settings, and then we have the body. You make this all blue. It's your choice. So I don't like green. I don't know why, but I think it's more comfortable with blue, because you have on the trading account you have. No, I have check the settings. On Pocket Option you can also just where I found it. I don't know where. It was a really pretty easy setting, but I don't know where anymore. Here. Like, yeah, okay. Here, client specific candle colors. You go here and you can just set up your chart is always on the 5 minute, and then go auf kundenspezifisch, client specific, and then you can choose here red standard, but yeah, blue. So you're similar, or you have area all over everything green. So yeah, so that's the setting I have, and it's pretty clear. So now we gonna go set up this stuff. So I take my handout. We are working through this a little bit. Here you see the explanation again for activate the strategy in 𝑥. So here also the study lesson I recommend in the course and lesson. Then we start with the strategy. For you to know, it's really important. This strategy works best in correlation phase. That means when the market is not moving, it's not trending up or down, just here. That's a correlation phase. You see it better if you go in 4 hours and a little bit a higher time frame. So I don't explain really in detail what that means, but here you have a trending market because it's going down clearly. Here you have a sideways correlation market, and here it's again trending. So that's a little bit the thing here. But for the beginning, you happen to know when the market is trending up or down, you activate 𝒊𝒆𝒈𝒍𝒊𝒈𝒍𝒂𝒂𝒄. But that's for you for the beginning is not necessary. You just have a look at the market, where it's going, and then you just trade. Later, when all this is clear, you set up the order strategy. So yeah, that's is here the explanation. So first we go to RSI, Relative Strength Index. You can detect the momentum of this. You can see it's overbought or oversold. So indicators overall you have here, and then I have done some favorites, but we are just typing it in, Relative Strength Index, and then I recommend to make a star on these things because you can go on favorites and pretty easy then. So, oh, I haven't found these. Okay, then we do it. So first, when you activate it, looks like this. It's pretty ugly. I think I don't like it. So I have explained how to set up. The standard is 70 and 20. So we just changed that to 75 and 25 because it gives you a little bit more room to breathe. This indicator shows you when is the market overbought and when it's oversold. So just we do the settings and then we go through all the stuff. So here and 25. And then I make the RSI black. Upper band is red because of that. I make a line. Down band is also a line. So then I just let the middle band. I just love a little bit more strength, and the background I just always blend out because it's really ugly. So it looks then like that. Here you see indicator interpretation. What means overbought? Here you have overbought, this crossing. When it's over here, when it's over 75, and here when it's below 25, then it's oversold and overbought. Because you have to understand. I hope I have here. Good. Yeah, here we have an example. The market is going up, 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 and then the price is really high. It's like you want to buy sneakers. You say, okay, $500, yeah, I can pay that, it's okay. Then, because so much people want to buy, I don't know, cheesy sneakers or stuff like that. Oh, I just pronounced it right, but yeah, so then you have everybody want to buy these cheesy sneakers, and the price is going up from $500 to $700. People still paying that. Then the sneaker is going to $1,200, and the people are thinking, no, I don't want to buy it. And here we have the point of overbought. Too much, the price is too high, and we have too much buyers in the market. That means it has to go down, and here we have it. The price is going down, and for us important is this crossing. Is this here break and re-break. That's what we want to see. The same example for so it's a bad market actually. It's not really pretty. What's going on? Sometimes they have really beautiful market, but here it is not. Okay. Here. That's not very beautiful, but it's like the same. When the price is too cheap, too down, the people are not willing to sell again, because you have to understand here, when you have, I don't know, gummy bears. So, and somebody gives you $50 for one gummy bear. You think, oh yeah, cool. And then you sell, and here you have $1 for a gummy bear. You say, I don't sell for $1. Are you stupid? So, and then you're not willing to sell again. Because it's like in cryptocurrency, you wanna buy really cheap and sell really high, because when you sell really high in the market, you have more winnings. So that's everything, like it's oversold by 25, like you see. Now that's the first indicator. And we go to stochastic. You search it with stoch. So, and here we have stochastic, not stochastic RSI, because this combines the two indicators. And it looks a little bit confusing at first, but we're going through that. You have to 80-20, 5-3-3. So, like it's here, 80-20, 5-3-3. Okay, that's correct. And then you have to set up the colors. You see here blue, red, red, everything clear. I think I have saved it as a standard, so it's like by me just background off and stuff like that. So here we have the explanation. Setting 5 allows closer line and better to recognize whatever overbought, oversold. So the lines are a little bit further. Here you have also the break and re-break rule by 80 and 20. So every line of these two is a currency pair, like GBP JPY. If GBP is less strong, it's the red line. So like here, like we here see. So that means if you want to have a confirmation for a good sell, you have to look for this or this. Yeah, blue has is stronger. Blue has actually is the boss, and here you see the switch red is the boss. That's a really good sign to sell, because red is now the boss, and you see it's going down, 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 down. So that is for us a good indicator. We are searching for that. For the blue also to be the boss. Yeah. So we just going through. I'm really sorry. It's a little bit annoying. For example, here you have an example. Red is going to be the boss. And we just have a little look of the candles. What has the market done here? Red was here the boss. We'll see. Here we have to go into that. It's just a little movement. It's not so nice, but you see it's going down, 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 down more until here. And here we have the switch again. Blue is above. Really simple. So now it's our goal to combine these two. So RSI important, you have to change to 4. And then it looks really better. So that's what I was a little bit confused, like it doesn't look good. So now we just combine these two. So we are searching for a good buy. For example, this. here. Here. You want to have buy as boss, and here also the crossing like break and re-break. So we have to combine these two. And here you see it was going upwards. Really, really beautiful. It's like 5 o'clock in the morning until 8 o'clock was trending up. So really cool. That's the two. So now that's additional that you have to read. Actually, we go to the Bollinger Band. Go and Bollinger Bands. So, and you see I have marked this, and this indicator is above here and not down below. It's directly in the chart, so because it's here. So we go to settings, and then here we have also the explanation. Everything is on place, just the background you can remove, and the colors are also the same setting as always. You have to understand that the candles are 90% of the time are the candles in the Bollinger Band. They're moving in the Bollinger Band, like how to say in train, I don't know the word. Track. Railway. Yeah, like on a railway. They're just moving in really nicely. Sometimes you have a fake out, like here. That was, I'm pretty sure it was a bank move. That's most of the time. That here also, these spikes. When you have these spikes, these big spikes of the candles, the banks are pushing the price down or pushing the price up, so they can place their orders on a better price. And here it's like when you're here in the market, yeah, you're pretty sure going to be spiked out, and that's the goal for the banks. So we have always be same clever like the banks. Yeah, that's the Bollinger Bands. Really important is the middle band. It's a little orientation for you. Like here, if the Bollinger Bands points upwards, like upwards, you see here, it's going to, like, it's like a snake, like the head of a snake. When the snake head is pointing upwards, the price jumps most of the time back, because the price will want to always go back to the middle line, and then often you have a rejection because it's going up. When it's going down, then you have the price down the middle line. And yeah, that's pretty important. When the price is near here, you have to check if the price has enough strength to break through here, or is it going to be rejected like a support and resistance line. It's going upwards again. So just that's a little bit know-how for your future. So now we're coming to the purple line, EMA. I don't know how that is in your English trading view. It's like klein und Durchschnitt ist 𝑦𝒐𝒉𝒆𝒊𝒂𝒍𝒕. I'm really sorry, I don't know. We have to take this, and I just show you real quick how it's looking. Oh no, it's not this. Okay, sorry. I always a little bit confused about this. Okay, we take this EMA from, you have here the producer, so we wanted this. You can also take the other one, but I'm pretty comfortable with this because you need a 200-day EMA. 200 EMA means you have the explanation. Sometimes I'm forgetting words. Durchschnitt. No, not English. Average. You have the average of the 200 last candles. So we want to make this purple. And I like it a little bit thicker because for me it's easier to interpret the market. This 20 and 50-day EMA you're making off. And I highly recommend to save. safe through your work. So because when you're not safe, you close trading view, and then you have to do it all again. It's very annoying. So here is important the direction of the EMA. It's like when it's down. Oh, here, that's a really good example. You see here, the EMA is down, the actual candle, and it's working like a support resistance. It's pushing up, so like it's going by. So, and you see here, that would be, I think, a pretty good entry if you catch it. So it's really important when you have here a sell setup and the EMA is down your candle. That's wrong. It's for you then to see, okay, nah, it's actually not such a good situation. We wanna, when we going sell, we wanna have this. See here, the candle, and it's above. That we wanna have. So that's a really important sign for yourself for the actual market. And that explains here. Below, and above. Then we go to the next stuff, and that is volume bars. And it's not the volume bars are not set with volume bars, it's just volume. So you can collect this, and now we have again the settings. I think by you it's green, so you can just choose whatever. And you see here, it's a little bit a tricky setting, which is I show you real short. You have here, when the candle is above this blue light background, it has enough strength. So, but it can also be an indication for overbought or oversold. You have just, it's a little bit market reading for time. But when I say histogram, you see it's changing. We maybe cross. Okay, it's just a little, I hope you see it, or we can make Sachen mit Lücken. Okay. Yeah, you can change really much. You can make just a line like that. But I'm mostly comfortable with this. And then I just say, okay, a little line. You can also make it, I don't know, red, or you see it change here. So that's everything we have to know. Really important for you when the market is open, like it's on 35, we become a new candle, and you are looking for an entry. It's important for you that the candle opens blue. So just in the first few seconds, I think so 10 to 20 seconds, the candle is oft fighting. It's like when you want to go buy, the candle sometimes open red, and then it's changing to blue because the seller want to push, but the buyer are too strong, and then it's going up like you would have it. So you just have to catch a little eye how you want to go into the market. It's like, are you just, when the candle is open, you're going directly, or are you the trader, you just wait a bit and have a look and then go in? So it's have both a little bit, I don't know the word, advantages and disadvantages. Yeah. So because when you go in a little bit later, you just have another look. It can be that you that the trade is gone without you. So, but when you go in directly, it can be that the disadvantage is there. You can be wrong, and it's going. The sellers are stronger, not how you thought. That's always be. Yeah. Volume bars, open red candle, open blue candle, really, really easy. Then we have the purple dots, the parabolic SAR. And we see how why these are the parabolic dots, because we make this thing purple. Your standard thing is Kreise, but I can't read it with Kreise, with dots. I take crossings. So that's just also a little bit a favorite stuff. So you can make it thicker, always you can make it this, but then you don't see anything. It's a little bit, yeah, you have to look. Here is important. For a good Y setup, the parabolic bar SR should be down the candle. So that's not what we want. Here, maybe that's a good example for a cell. Ah, no, it's also here. No, here. Here we have a good example. Bar by and the parabolic dot is down below. It's not, so this indicator is not so important, but because most of the time it's not right. Here you see cell right, but often of the time it's just the other way. What you have to do is just looking for the trend line, because when the parabolic bar is changing, you see here, cell, and here we have the indication for a trend changing, like we had here. I make a print screen, that looks beautiful. So yeah, and that's the explanation here. Below and above, it's for a trend crossing. So there we are. That's everything we have to collect for plus confirmations. You see here an example. RSI for a cell. Okay, break and re-break, nice. Stochastic, break and re-break, nice. Plus cell, red is the boss. EMA above price. We want to have this candle here with the line. Yeah, that's okay. That's pretty okay. Candle touches upper Bollinger Band. Yeah, sure, because the Bollinger Bands are also a support and resistance. And when the candle is near, it's better for you. That's going down for rejection. Or here you see buy for upward. Volume bar is red. Parabolics are below price. That's wrong here because it's down and it should be above, like we discussed. But here you see the importance on the indicators, like that's really important, is to then also important, it's just going for the importance. Then we have a buy opportunity, RSI break and re-break here, and stochastic, both right. EMA is above, below. That's, yeah, oh sorry, it's that's translating issue. I have to correct that, it's below, sure. Candle in the lower BQ, you see here, it could be nicer because it's not touching it. Volume bar is blue, parabolic SAR is also not right, but that's no problem. You have 4th of 6, that would be a trade we can enter. You see it was 5, 10, 15 minutes had the time, and here also what a really good setup, 15, 15, 20 minutes down, so really cool. That's everything you have to know and you need for first trading. I think we discussed everything. I just correct the handout. So because yeah, it could be a little bit confusing then. The last step is how I find the correct entry. It's like the best price is for you to go in then where the last candle has closed. So maybe I can explain it here. We want to go buy. A sell candle is always closing below because it's going down and the price closes down. A buy candle you see here always closing up, just the highest on the highest price, pretty natural. So when we want to go buy, we have a good example. The best entry here would be this. On this same, the entry is the same price like the closing of the last candle. Like here, the candle has closed on 78 and we want to go in there. It's not always possible because, like I said, you can go in directly. You say, this is my entry, or you just wait a few seconds after the candle is opening. So when you are in the 5-minute chart, you always become a new candle on 5 minutes, 40, 45, 50, 55, 0, 5 minutes, 10 minutes, 15 minutes, like that. When you go in the hour chart, the candle is opening hourly. You see here we have 90 minutes left until the new candle comes, like 1 hour, 2 p.m., 4 p.m., 5 p.m., 3 p.m., 6 p.m., 1 a.m., 2 a.m., like you understand. So that's everything to know. Really important for a good analysis, I recommend to first go in the daily chart, like I have done here. Just make it really big. And then I take the last 2 candles and just draw it. Because here it's like the last candle was 17 November, we have 18. And before we started, when I just made the analysis, the candle was here at the last price. So you draw it here and here. And the second candle with the spike, with the, okay, I don't know how to say in English, the wick. Oh yeah, the wick. You have here a line, the daily line, and here above the daily line. And then you can go back to 5 minutes or hourly or whatever you're doing. But that's an important step to know, because you see here, that was a pretty good example. Oh, yeah. I just have to correct it shortly. It was here, I think. And then what I have traded there was going to the 5 minute pack. And then you see here, that was beautiful, beautiful rejection. Here I was winning, and then it was going down because here it was, like I said, red is going to be the boss, and here we have the cross and we break. Yeah, that was everything today with the class. I hope that clears a little bit and we can trade them together. Just write in the group if you have questions on them. That was for today. I wish you a really nice day.